Alrighty, traders. Good afternoon, and welcome to the Fed's rate decision that's coming up in the next 15 minutes. My name is Gary Fickart. Many know me as the FxBigDog. Welcome to the broadcast. We're going to go ahead and get ready and take a look and see what's going on in the market, and just go ahead and do some prepping and to anticipate what could be going down this afternoon. And we did a show early on this morning where we spoke about different options that we can probably expect the market to go ahead and move. So we'll definitely go ahead and take a look and see how that plays out this afternoon. So I'm certainly looking at the Fed to possibly go ahead and raise the rate, but I think I'm 80% there. I think 20% says that the Feds are going to keep it unchanged. We'll take a look at how it all plays out. I do expect the dollar, however, to be bearish for the most part of today, which means that we could see a big push to the upside, just a slight push, and then a downside move. Again, I'm looking at the CPI numbers that came out a couple of weeks ago. And based on the CPI numbers, based on the housing market, based on jobs, all of this other good stuff, the Feds have to come to a point where they're going to have to slow down and take a little break from raising rates. Now, I know that we're nowhere near where the inflation number needs to be, but they want to make sure that they don't go too quickly on dropping the inflation number, because that could create bigger problems here in the U.S., in fact, through the economy. And so it's going to be interesting how they play it out today and what has been said in the verbiage in the press conference. The press conference is going to take place at 2:30 this afternoon. I'll probably not make that session, but we'll see what happens with the press conference. And if we do get a rally, maybe that press conference is going to go ahead and push the market down due to the fact they might go ahead and say, we may go ahead and consider that we're going to hold off on interest rates because the numbers are saying that they have to do that. So it's going to be interesting to see how things play out. So let's go ahead and jump into a couple of charts, and let's go ahead and check out what we have here with regards to the markets. All right, so I'm going to go ahead and let's go ahead and throw this up over here. And let's see here. We got the now I've got the Euro Swiss open right here. And I know that we've got quite a bit of resistance coming off this area there. And so a break of that would give us a short-term rally towards the 200, maybe towards that low there as well. So that's something that we're going to be looking out for as well. Does the Swiss lose ground with the dollar? Whatever the news is out today, does the Swiss lose ground? I'm looking at all the safe haven currency pairs and seeing how the safe haven currency pairs actually feature in today's trading. We had the Dow that opened up this morning. If I look over here, I think we opened up bearish on the day, and yes, it did. It did open up bearish on the day, but we did see this rally, so we filled the gap for this week's or this today's trading. So it's Dow is slightly down. Now that would mean dollars are slightly up, but we are starting to see a little bit of a push on the Dow right here as it starts to push a little higher. So does this indicate that if the Dow is going to get stronger, dollar's going to fall? Well, it could be, and that's the reason why I'm also looking for the dollar to go ahead and drop. Now that's not the only reason, right? If we go back to let's go to the dollar index chart right here, and let's take a look. So the dollar index chart right here is indicating that the dollar is actually in this rally. But again, this rally is not going to stay here for too long, right? We're going to start seeing price work its way down south a little bit. So this is the sort of channel that is forming right now. That's the channel we're seeing right now. But this channel has to come to an end, because if you look over here, we do have a wave structure that's in play. And the wave structure looks something like this, where we've got a wave 1, 2, and 3 down here, 4 up here, testing the previous low, and now we need to see price move down to the 5th wave. So let's go ahead and make this change here. Change the color there. This can go a little bit bigger. There we go. So there's that wave structure that we've seen play out right here. All right, there it is there. Now we're expecting the dollar to fall a little bit further down south. Now I get it. You're seeing a little bit of oversold condition right there. That doesn't stop the dollar from falling. We could see the dollar continue to break through this level right here and then come back up and retest and do this. So we could get this type of movement as well as price comes back up here and then drops back down south. So that's not enough to say that could be the change that we're going to see in today's trading. Let's take another look over here as we dig into this a little bit further. And a couple of people saying, yeah, oh yeah, there we go. A couple of people saying, howdy, big dog. All right, good stuff. All right, so this is the thing right here. What I'm going to look at is I'm going to look at the US dollar CAD right here. And if I go to US dollar CAD, we see that the market's testing this level of resistance. Again, short-term rally, possibly going to see the market coming back down to retest the support here and breaking through. So we are range bound on the dollar against the Canadian right here, and we're at resistance. So again, a reason why we could see the market back down towards that support level again. If I go to the Euro US dollar right here, let's take a look at the Euro US dollar, and I'm going to go to a larger time frame. There it is there. So we can see that the market is also finding a level of support right here and a level of support right about there from these resistance levels. All right. And so this is an area, this should be a buy zone right here. This should be our buy zone where we can anticipate price to go north. Now, the oscillator is moving down, but again, it could go into this sort of pattern right here, and that would mean that we could see a rally taking out the high and then create a negative divergence, and that would be the perfect pattern for us to go ahead and see price go up higher, take out the previous high, and then trade up to towards the 1.27 before heading back down south. The other thing that we have to also consider right here as well is that, remember, traders, this is the daily time frame. So I don't want to be this guy that says, hey, this is definitely going up without a shadow of doubt. I do want to say that there is room for the market still to play here, which means that this news today could be already priced in and the market could just be whippy-lashy right here. And then eventually over time, we could start seeing price working its way up, because the technicals do indicate that we should see a weaker dollar, but it doesn't necessarily mean that today's going to be that day. Today might just be a starting point or sort of a way that the market's now going to digest that information. And over time, over the next couple of days, weeks, we'll start seeing it play out. So the news doesn't necessarily drive the market in a direction right away. Sometimes it's just the news that shocks the market, all right? And then eventually they digest the information, and then we start seeing it play out in other news reports that we start seeing in jobs, in housing, in inflation. All of that stuff starts playing out, and then we start seeing the market create sort of a trend. We know that we're in this retracement move on the Euro US dollar, and we know that price needs to start expanding to the next level. And so this is why we're expecting at least a little rally. Now, another thing here could also be a factor that we could see the market bounce over here. Oscillator could come back up here. We won't see divergence because it won't take out the high, but it'll be enough for the market to come back down again and retest this level. And by that time, we're down into an oversold condition. And then if we're retesting this level of support right here, then maybe that would be the bounce back up. Now, again, it's very tough to trade news, and it's very tough to trade news based on short-term setups, because the market could be really choppy before we start seeing the market take it off. So, with that being said, again, this is going to be a very, very complicated scenario, but we're going to have to play it out and wait for the news. So as the news comes out in the next 6 minutes, we'll know exactly what the market's going to do, and we'll tell very quickly whether this is just a choppy move or it's just going to be breaking out in a direction. Because if you go to the US dollar CAD and you look at the daily time frame on that, we're also in a range on US dollar CAD, and it's ranging between this level of support down here and that level of resistance. And we've told many times that the market's going to come back up to this level. So the question here is, if it comes back to this level and breaks out of it, are we going to be bearish or are we going to be bullish? Is this going to be a fake out and then down, or are we going to actually start being back or start pushing back up north? My sentiment on this would be that price, if it breaks back above that 133 level, we're going back up to 138. That means weaker dollar, stronger dollar, and it's certainly playing in a play out. And that would mean that if I go back to the dollar index and I say, okay, if that's the case, then where could we go on the dollar index? Well, traders, this is the thing. We did come off the support right here. The market is starting this rally, so which means if it continues, then it means it's going to go into a higher retracement, and this is just a larger range and probably an irregular flat pattern, although nope, we didn't take out the low, so it's just a range, and the market's then going to go back down south again. So if that's the case, if we do go back above that 133 on the US dollar CAD, then this could mean that the dollar's going to gain strength. And so what we'll have to look at is if the dollar does not go above 133, is it US oil that's going to stop it from going there? Because if US oil keeps climbing, and as it climbs, we get in stronger Canadian dollar, then the CAD should fight the US dollar rally, and we should see 133 hold. Again, remember, we're inside a range on the US dollar CAD. We'll have to wait and see. Now, someone's asking me about the CAD Swiss. All right. So what's going on with the CAD Swiss? I know there's a lot of people trying to establish what the CAD Swiss is going to be doing. Oh, let's go take a look at the CAD Swiss right here. So I'm going to go across the board right here, and not just to go to the clearly, of course, we should see some stronger move in the Canadian dollar because U.S. oil is on the rise. U.S. oil is going, and we mentioned that U.S. oil, we've mentioned a few times, U.S. oil is heading towards $82 a barrel. So we are seeing some strength coming out we should see some strength coming out the Canadian dollar. In fact, here is my currency strength dashboard, and it was just updated here at 1 o'clock today, 1 o'clock p.m. Eastern Standard Time. And at the moment right now, based on what we've had during the European session, we've now seen a closeout that we're seeing that Swiss is strong. Again, at 5 p.m. this afternoon, we're going to see another update. And it's going to be interesting to see if we do see some downside move in the Swiss. Because remember, what is our safe haven currency pairs? It's the Swiss, it's the US dollar, right? It's the JPY, and it is the euro. These are our safe havens. And so if money flows into if there's a lot of money flowing into one currency, then the others might take a little bit of a beating. And it's very seldom you actually see all of them dominating. In most cases, one of them stands out above them all because the money's flowing more into that. And we're going to see in today's trading whether we do start seeing a downside move in the Swiss. If the Swiss starts weakening, and then we start seeing the JPY strengthen, then we know that money's flowing into JPY. If the dollar's the one that actually starts rallying, because currently now it's weak, if that's weak and we start seeing money flowing into other pairs like JPY and Euro, then that might be the case. Because if you look over here, look how the dollar's already weakened, and the other three, Swiss has strengthened, JPY has strengthened, and Euro has strengthened right there. So if the dollar does change and today is a rally instead of a dip, then could we start seeing money flowing out of the others? So why am I mentioning that is because someone mentioned about the Swiss, the CAD Swiss. And so the thing here is, I think if we see a rally in the dollar that could pull money out of Swiss, and if that means Swiss is moving, money's moving out of Swiss, that means Canadian Swiss could be a rally. Again, let's take a look in the next minute how this plays out. I'm going to go into, let's go into the CAD Swiss and take a look over here on the CAD Swiss. And let's go ahead and take a look over here. So CAD Swiss is trading at 65.25 right now. And we've got about just less than a minute, I believe. Yep, it's just less than a minute before the news comes out. And let's take a look over here. So 65.25. I want to also go to, I'll come back to this. I want to take a look at our US dollar CAD moves. And there it is. We got something going right now. And looks like we get Dollar strength, because just seen another setup here on, let's see here. So we're at what, 32.27? Not a big move yet. Let's go take this down to a 1 hour, actually a 15-minute right here. And on the 15-minute time frame, well, actually no, the 15-minute time frame is showing us that it's spiking up and down. Not really moving right now. And if we go to, let's take a look here. I'm going to pull up CAD Swiss right here. CAD Swiss is at 65.22. Again, not a lot of movement out of the CAD Swiss. Choppy. Let's go take a look at the news. What did the news report out this? Yep. All right. So they did. They raised the rates 25 basis point, right, from 525 to 550. So they did go ahead and raise it. I'm going to be honest with you. I'm a little surprised, but I think the market has already priced it in. I think we've already priced it in because we've not seen a big reaction out of the market right now. Just a little choppiness right here and there. Let's go to US dollar JPY. That tends to move a little bit more. Also choppy. Back and forth. Didn't expect any fireworks unless a major surprise in the market. I said there was a 20% chance that they're going to keep the rates unchanged. Now I think what's going to come down is going to come down to the actual verbiage in the press conference, and that verbiage in the press conference is going to take, well, there it is there. It's at 2:30 this afternoon, and we'll have to see how that plays out. But right now, not seeing a lot of movement. I mean, it's spiked up back and forth right here. It's moved, okay, now it's moved about 30 pips on the JPY. So from the high to the low, it's about 30 pips right here. Not a big move. Let's go back to the, and of course it looks like it's bearish dollar. All right, there it is. So dollar's moving bearish on the, let's take a look over here. Yeah, so the if you look over here, we do see a spike from the open of this candle to there. That's about 15 pips around about there. Not much on the US dollar CAD. A little bit more double. We get double movement out of the US dollar JPY. It is currently right now, based on the news, just like I said, I think we're looking for a bearish dollar. And let's go to the dollar index here and take a look at the dollar index. Yep, there was a spike down south on the dollar index on the 15. Again, this doesn't really define what the market's going to do over the next few hours. This is just the market reacting initially on them keeping the rates, or at least pushing the rates up at 25 basis point. It doesn't necessarily set the tone for the rest of the day, because the press conference is what's going to really get sort of the market moving, because I think they're going to wait and see, all right, prices, the market already priced in the rate hike. We got the number. The number was 25 basis point hike. Now, let's go take a look and see what the Feds are doing moving forward. Is this going to be a continuation, or are the Feds going to talk about softening and maybe hold off rates next time around? And if we take a look at the central banks here, we can now see that. Let's go ahead and refresh this. Oh, there we go. So we can see now that the New Zealand and the US are both at 5.5%. Looks like everyone's trying to catch up. Everyone's staying pretty much close to where that number is. So all the central banks are pretty much on par as to where they want to go ahead and keep the interest rate. And except, of course, JPY, Bank of Japan, Swiss National Bank, Euro slightly lagging behind. We know we're going to interest rate coming out tomorrow. They can look to raise the rates also 25 basis point. Do they jump it and make it a 50 basis point? Well, we'll see tomorrow. So a lot of this stuff is really playing out. We got the Feds coming back again on the 20th of September. So that's 2 months out. Remember, we are now in July. So we got August, all right? August and then September. So we got 2 months before we see, of course, another rate hike. So this is a big gap to what they were expecting. So we can certainly see that the market has time to digest the information and play out over the course of the next 2 months as the data starts sort of confirming what the central banks are doing right now based on the increase in interest rate. Now, if I go back to the larger time frame, this is what we're seeing here in larger. We did anticipate resistance here. We spoke about it this morning in this morning show. You see right here, we haven't quite got the evening star being confirmed yet. It's not a 60% U-turn, but we definitely have indication that that price wants to push down lower. Another thing we have to understand is that this push right here might just be a short-term dip and not necessarily a long-term outlook. All right, Janet, good morning, good afternoon, sorry. So this is definitely things that that start to play out. Let's take a look and see what the CAD Swiss did this morning. Well, 23 didn't look like it. This afternoon it didn't move much. It's at well, there it is at 65.23. Not a big shocker to the market. And again, I think everything's going to come down to the rate, or the press conference. There it is. There you saw a little spike down here, but it's pulling back up again. So, all in all, traders, this hasn't been a huge shocker to the market. And I think the reason being for this is because a lot of the stuff has been priced in. The Feds have been pretty clear about what they're doing and what their goal is. And they do want to get inflation rate down to the 2% benchmark. They have got inflation down already to 3%. In fact, let's go take a look at a couple of weeks ago, they had the numbers up. Let's see here. It was, I believe, this week here. Yep, there it is there. Year-on-year inflation came out at 3.0%, and they were up at 4% the previous month. So that's a 1%. That's 0.25%. That's 25% down on what the inflation number was at. And that's pretty solid because, their goal was to get inflation back to the 2% mark. The question here is, now that they've gone and taken off 25% of the inflation, are the Feds in the press conference going to indicate that there is going to be a softening? Is it going to be a slowdown? Again, we'll have to read up the verbiage in the actual statement as well, and we probably could get a hint before we actually get to the press conference about what's going on. And I think that's going to be the case. I think there's going to be a softening. And if that's the case, then dollar weakness should come into play as they keep the rates unchanged and possibly even start looking to hike the interest rate if the inflation number does drop drastically again in next month's trading. In fact, it'll be interesting to know when the next call is going to be on inflation numbers. Let's take a look here. And I can get a sort of an idea. It looks like it's around about the middle of the month. So we should get a number out around about August, mid-August. So let's take a look over here. Mid-August would give us about here. And there is the CPI for the Canadians and the US. We might be a week ahead. We've got meeting minutes right here. So let's take a look and see the next week or the week before that. Let's take a look here. Dollar, flash manufacturing coming out there. So it looks like it must be this week. There it is. Perfect. So there's the number. So on the 10th of August, we're going to have inflationary numbers come out. I think that the inflationary numbers is going to be a far better way to address the market and watch the market play out than actually take a look and see what the Feds do with the interest rate. Because I think the inflationary numbers is going to set the tone. What the Feds do in September, what the inflation number is going to be out in August will certainly drive the market in a direction. We saw it play out as we did a couple of weeks ago. In fact, a couple of weeks ago, we could see here on the dollar index that a couple of weeks ago when the inflation numbers came out, this is what we saw in the market right here. So this is what we saw right here. And let's take a look here. This is July 14th right there. July 14th, when we saw the inflation numbers drop, this was a rally on the dollar. And this is why I say that this might have been already priced in, because when you increase interest rates, what happens? The currency actually strengthens. And so here we see that when they increased the interest rate, we actually did see an increase in the dollar. Sorry, let me rephrase that. when we saw the inflation numbers decrease, then the expectation was that we will see an increase in the interest rate, all right? Because the Feds had already spoken about that the previous time. They said they will continue to raise rates until they get to the 2% mark. Now, I thought that with the interest rate, with the inflation coming down as much as it did, I actually thought that that might change the view of the Feds, that they may go ahead and soften and hold the rates unchanged for one or two meetings. Clearly didn't happen. So what I'm going to say is, if we start seeing a downside move in the dollar, then that could indicate that the Feds back in September could end up starting to slow down and have the rates unchanged in September, especially if the inflation number does show that it's ticking lower and faster lower than they expected. All right, well, that pretty much wraps it up. Not a very exciting session in trading. And this is probably one of the reasons why I don't trade fundamentals, because the market can be really choppy and very unpredictable. It's not really the ideal situation to be able to trade this. Now, traders, I do trade with different types of strategies, and I'll tell you what's really doing well. What's really doing well is strategies that follow a cost averaging a trading approach. In fact, we've just released another strategy that I follow that has applied the same rules, but now we do what we call a hedge strategy, which means that we're trading both the buy signals and the sell signals, but we're trading them on different trading accounts. So and the reason why this is good is because it helps us to manage our risk on both ends. And so we have much better equity management, but also at the same time, if you get caught into a position, especially on cost averaging, it can happen where the market goes in one direction. And when the market goes in one direction and you're holding on to that position, you now have the opportunity to be able to sell the opposite side. And that's how you'll be able to take profit on both ends of the stick. And that's why hedging with a cost averaging approach really works well with a good strategy behind it. All right. Now, let's go ahead and take a look at, someone's thrown in here, let's take a look at the pound US dollar. And I don't think we're going to get a lot of action out of that the session right here. Let's take a look here, diving into the 1 hour right here. And traders, this is the thing. In one of my sessions today, we took on a sell on the pound US dollar. And I want to go ahead and share a little bit with you why we did that. If you take a look over here, we traded a sell because we had the market created wave 1, 2, 3, 4. And right here, we had the pivot point holding up over here. So we had the fifth wave complete. And we said that price is going to dip down, even if it dips down just for a short 20 pip grab. That's exactly what the market did this morning, or at least this afternoon. And yeah, you can see the history right here. There it is. Pound US dollar, we took a sell. You can see the date there, 26th of July. And then we grabbed our 20 pips and got the heck out of Dodge. So we picked up our 20 pips, closed out the position, and the reason why we did that is because of this movement right here. This one right here. And that was the dip that we picked up right here. So what do I think that the pound's going to do now overall? Well, I think the pound, if you look at the daily time frame right here, right, the pound against the dollar, I think we're coming up to a 1.27. If you had resistance right here, I believe the pound's going to work its way back down towards this level at 118.38. And so I think that what's going to happen is the market's going to be doing something like this and work its way back down. So if you want to find out a little bit more about this pound, you want to get more involved in this, let's go ahead and do this. Go ahead and make sure that you subscribe to the channel. FxBigDog, go ahead and click the subscribe button. Share this video to as many traders as you possibly can. What we're going to do is, on a regular basis every week, we're going to come in and I'm going to take one currency pair and I'm going to work that currency pair where we're going to go ahead and look at the currency pair and we're going to build up a trading plan on how to be able to trade it. The one thing that I'm going to say for right now is that traders, we need a pullback. In order to be able to get in on this trade, we need to pull back. And the only way to be able to get the market back up here again is to have, of course, the pound strengthen against the dollar. So pullback is due. We're going to trend trade this. We see a nice oversold condition right here. We have resistance at the top right here. We need to pull back, and then we're going to go ahead and sell it off. So if we go down to the 1 hour time frame, and we look at the 1 hour time frame setting up over here, what I'm going to be looking for right here is the fact that the market created this wave 1, 2, 3, 4, and 5. I'm going to look for price to take out the high right here, probably go up a little higher. So as the price goes anywhere between 29.60 and 130, this is going to be where we're going to look to sell. This is going to be our sell zone. All right. So despite the fact that we're seeing that the 1 hour time frame is in an overbought condition, we're currently right now setting up with an opportunity to possibly see price moving down. Now, am I going to sell right in the further sell zone? No. What I'm going to do is that I'm going to look for the pound or US dollar to get into the sell zone. Once it gets into the sell zone, then it's going to set me up to start looking for a sell. And that means that traders, I'm going to go back to my trading strategy, and I'm going to look for price to confirm that we're now in a short term. Now I'm not looking at the long term anymore. I'm now looking at the short term, and I'm looking for reversals on the short term to sell off back down south. Let's see how this week plays out. We'll be back next week with another session. We're going to go ahead and break it down, set up trades, and also what I'm also going to do is inside the Telegram channel, in my Telegram channel, I will be posting actual live trades on the currency pair that I actually follow. And we're talking about a swing trade that we're going to be looking to get in and stay in that trade for a couple of days, maybe a week or so before we start seeing some profits. We'll figure that all out in our next session. Traders, with that being said, I want to go ahead and thank everyone for coming in today. Hopefully you guys learned a little bit, picked up some information. Good luck with your trading. Let's see what the press conference does, and I'll see you next time. This is FxBigDog signing off.